I'm Charlotte McLeod with the Investing News Network, and here today with me is Chris Mancini, analyst at the Gabelli Gold Fund. Thanks so much for joining me today.
Yeah, thanks, Charlotte. Happy to be here.
We're here on the very last day of the Denver Gold Forum. What are your takeaways from this conference? How has the mood been about gold?
I think that the big takeaway, obviously, was the big announcement on the first day, the Randgold Barrick deal. That's very interesting. I mean, it shows that there's activity in the sector. I think also the fact that there's stuff going on with Detour and Paulson, and there are activists in the sector shows that we're kind of at a bottom when there are these kinds of transactions, nil premium mergers of equals, trying to kind of maximize value in an asset that's never been able to maximize its value, and in Detour specifically, like, things are happening, and hopefully this is the bottom.
Yeah, when we spoke earlier this year, back in May, you actually recommended Randgold as a company that you're looking at. Is this deal good for the company? What do you think?
My judgment's still out on this, frankly. I mean, I think that we really like Randgold. I mean, it's a high-quality company, no debt on its balance sheet, low-cost operations. It pays a dividend now. We think that the company will be able to continue to pay a dividend, and if the gold price goes up, pay an even bigger dividend. So we're happy with the concept of a company returning capital to us. Now, if Randgold can kind of replicate in the new Barrick what it did with Randgold, then this is a fantastic deal because it's a much bigger asset base, obviously, with Barrick and Randgold together, and we should see the combined company generate lots and lots of free cash flow. And if and when the gold price does go up, we'll get so much leverage to the gold price. So, we don't like the fact that the combined company is going to have debt. There might be too many assets within the company. The valuation is a question. I mean, we thought that Randgold was cheaper than Barrick, but all that being said, I mean, I think that there's a lot of opportunity for the Randgold management team to optimize the value of the Barrick assets. So we think overall it's a positive thing to see.
What about, these are two very big companies coming together. What about smaller companies? Do you expect to see more of this activity there?
I think the smaller companies, yeah. I mean, I think what we're seeing is, especially in this market where the gold price is flat to down, the market's just taking any opportunity to slam the stock of a company that's a single asset company, which doesn't meet its guidance. And the market's really forecasting into the future. Even if it's something that happened for a couple of days during a quarter, the market forecasts that out for the rest of the mine life, even if that's 20 years. And we saw that with sentiment stock a couple of months ago. And so I think that it is somewhat likely that the gold price stays here, that you could see single asset companies combining to kind of mitigate that event risk that could happen to the stock of a single asset company.
Okay, you mentioned just briefly offline about last year's big news at this conference, the Paulson & Co. announcement, and they've made some progress on that front. What do you think about those developments? Is this something that can really make big gold miners more accountable?
I think the fact that, again, that we're seeing activism in the space shows that there probably is a lot of value there. Anytime that you take a real microscope to a gold mining company and its operations, I think it's a positive thing. I think the more transparency, the better. So to the degree that that this activism engenders kind of more clarity at the operation into Detour, I think it's a positive thing. And I think that to the degree that the risk of this activism causing the microscope to be placed on other companies causes them to be more transparent, I think it is positive for the industry.
Finally, gold price. Where are we going next in 2018? It hasn't looked so great so far.
No, I mean, I think it's really a function of the dollar. I mean, what we've seen over the past couple months, when gold went from around $1,320 down to $1,160 at its bottom, was that we saw the gold price strengthen, and we saw the dollar strengthen and the gold price weaken. And as the dollar strengthened, we saw the net speculative position in dollar futures increase, and then we saw the net speculative position in gold futures decrease. So like funds were buying dollar futures and selling gold futures. And now we're at this place where gold is oversold. There's a big short position. But if the dollar keeps strengthening, gold will probably keep weakening. So I think at this point in time, for the rest of 2018, it's a call on the dollar, and I'm not really sure on the dollar.
Any final thoughts you would leave investors with? I know you think everybody should have gold in their portfolio.
Yeah, I mean, again, everybody should have a little bit. The gold price has gotten really slammed over the past couple of months, and we are seeing activity now here in Colorado. We're seeing activity. There's like things percolating around, and hopefully it's a sign that we're at a bottom.
Fingers crossed. We'll see next time how it goes. Thank you so much. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Chris Mancini with the Gabelli Gold Fund.